Valuable viewers, I'm happy to see you back on my channel, and today is going to be a fascinating live trading session that I'm going to give you. Now, we are moving forward from our last video, and if you remember, our last video was about getting started. So what you get once you open your trading account, what do you actually get access to, and we discussed that opening a trading account is just getting an access to huge liquidity. You go to the capital markets that consist of trillions and trillions of dollars being traded every single day. And now by having your trading account, you have access to that liquidity. You can put your hand and take some money for yourself, $1,000, $10,000, $1 million. So we discussed all that. Your trading account, first of all, means access. Also, what we did, I showed you the trading platform, so I explained to you what it consists of. So we discussed 5 classes of assets that now are available for you for trading, right? We talked about Forex, we talked about commodities, indices, cryptos, and we talked about stocks. So now you know that there's 5 different classes of assets that are completely different in nature. Okay, also what we discussed is how you make money. So we discussed the graph, what it consists of, the green and red candles. Okay, how you make money and what directions, let's say, you can trade to make money, sell and buy. Okay, how you speculate, let's say, to make money. So we discussed all that. That is cleared, should be cleared anyway. Also, we talked about the risk management and how much money you want to use out of your capital for trading, how much you need to leave aside. Okay, so we talked about that as well. So now you know how to identify the amount of your risk, let's say. Okay, so you can, just check it if you didn't see my video, just check it and you will learn that as well. Now, also what we did, we opened several trades, we opened 3 trades actually, in order for you to understand what it takes to open a trade. So you should now know, right, how much money you putting into a single trade, how much you get back in return. Okay, we discussed about the risk nature and so on and so forth. So what we did last time was a very beginning, just to give you the base, to help you to open 3 trades using the trend. Okay, so the trend is your friend, remember. So by following the trend by yourself, that's how you make money. So today's session will be the next step for you to start understanding what are the ways of trading that actually you can start using from today. And before we start, okay, I'm gonna explain to you that there's 2 types of trading, right? So there's technical trading and there's a fundamental trading. Now, what is technical and fundamental trading? Do you have an idea? Now, if you have an idea, it's good. If not, then let me explain to you. So technical, it's obviously very similar. It's very easy to understand, right? It's just a technical analysis when you use different indicators in order for you to identify the trend, the direction of the market. And on the other side is fundamental. It's obviously when the market is moving by the news, when there's any sort of announcements happens, right? When it's, let's say, economic reports, politician speech, and so on and so forth. So when something big happens in the market with regards to news, that is shifting supply and demand, and that makes the prices to go up and down. And you can take advantage of that, and also you can get at a risk, okay, if you're trading and something like that happens. So in order for you to trade, let's say, technical and fundamental, of course, you need to understand both, let's say, ways properly. You can also combine them, which is going to be a very good way for you to use both knowledges, okay, to maximize your chances of getting the right direction. So today I'm going to give you a very simple but very, very powerful tool for you to start trading. And that tool is actually free of charge. So you don't need any signals. You don't need to pay anyone. Okay. And by the way, you don't need to rely on someone's signals, people that you don't know. Okay. You don't know their level of experience, their knowledge and stuff. So they could be giving you random signals and you don't know the source. But now you will be in a position to go and analyze the market yourself without actually being, a scientist, let's say, right? A scientist or having a huge knowledge in trading. No, I'm gonna explain it to you like I did the last time in the Mickey Mouse language, in a very simple way, how you can actually do that, how you can get started. So let's go back to my trading platform. Okay, I'm gonna come here again and let's start from what we did last time. Let's just quickly observe, by the way, that last trades in order for you to remember what happened. So last time we opened 3 trades, okay, and we opened 3 trades using $10 each. We said that $10 was 5% of our capital that we were using to trade. 5%. And that 5% of capital was representing $10. So on these two trades, we used $10 and we set 10% return. So that's why $1 there is a profit, okay? So that was the 10% return achieved. Now, on the third trade, we opened, it's a bigger trade size, right? That was already $20, right? 25 in fact, and we put $2.50 in profit. And as you can see, it actually gave us 2.80, right? Now, before we discuss, okay, and continue discussing your return, let's just look and quickly observe the timing. So if you look at this, okay, the trade was open at 8.23, okay, euro US dollar, and open at 8.31. So it took 8.23 and 31, so basically about what, 8 minutes, right? About 8 minutes for the trade to close. So in 8 minutes time, the trade delivered 10% return, right? Similar to this one. This was open at 26 and then it closed at 31, right? A similar time. So it took it even 6 minutes. Also 10% return. Now, if you look at the other one, it was open at 8.36 and closed at 8.53. So that took it a bit longer, let's say 20 minutes, but it still closed at 10% return. So that's what we discussed last time, how to achieve your first 10% return, and why not 20, why not 30, and what it takes, by the way, to achieve 20 or 30%, right? And that's what we discussed, the risk nature. And just to remind you, the risk nature is the time. So the longer you hold your trade open, the more risk you take. All right, but let's move forward. Now, today I'm going to give you another trading session. So this is not going to be trading by the trend, which you already understand how you make money. So to make money, as we said before, you just simply need to understand the direction of the price trend, where the price is going, if it's going up or if it's going down. So that way you can actually make money by buying it or selling it. Remember, that's also we covered on our last session, that you can make money either way, by buying and selling. So if you didn't watch it, please watch it, and that will clarify a lot of things for you when you trade and how you make money. Now, moving forward, like I said, today I'm going to give you another trading session that will explain to you what the technical analysis consists of, okay, and how you can simplify that to yourself, right? So we're going to go again to my trading platform, and I'm going to go to another website now. Okay, I'm going to go open a page, and we're going to go to a place that is called investing.com. Now, investing.com is one of the biggest financial websites with a lot of news, analytical data. It's a very good place to go and check economic calendar, right? That's actually something that is causing, let's say, fundamental movements, okay? We will cover that at a specific session. So please subscribe to me and follow me, and also put the bell so that you don't miss my next video. I will explain to you on the next stage the fundamental trading and what it takes to take in account, let's say, when you go to open and place your trades. Okay, so how to expect the news, how to know what's about to happen. So that's going to be something very interesting to learn on the later stage. But today we're going to cover technical analysis. Now, by coming to investing.com, you can go to the top of the screen where you see technical, and then go here to the technical summary. Okay, technical summary. Now, on the technical summary, what we're going to get here, we're going to get the list of different assets, real-time technical analysis summary, and it's Forex, indices, stocks, futures, commodities, my quotes and stuff, right? So you can see these 5 of class of assets that we discussed last time anyway, and they're also here available for you to get some idea on where the market is actually going, where the price is going. So basically what we're gonna do today, we're gonna go to trade Forex, but before we do that, I'm gonna explain to you what these signals consist of, so that you know exactly what technical analysis represent. Now, if we open, for example, Euro US dollar, okay, and we just scroll here, down, 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 we're gonna come to technical analysis. And then by coming to technical analysis, I just want you to know that the technical analysis is actually a way of identifying the direction of the price movement by observing different technical indicators. And there are many different indicators that can be used for trading, for identifying the market's direction. And all these indicators are so different, they're so confusing, and especially for someone absolutely novice. And many people start applying indicators on the graphs without really understanding what they mean. and then they start confusing themselves because different indicators mean different things, right? Mean different volumes, directions, okay, ups and downs, highs and lows, and a lot of other things. So imagine if you was going to go and learn all these indicators and how to read each one, it will take you months and years probably to understand every single indicator. So no one knows every single indicator, trust me. And you don't need to, by the way. And also another thing about indicators is that it's also something that gives you just an idea, but it's not guarantees that it's actually something that will go, okay, that direction or will not. So if someone says that he can guarantee that by observing his indicators, he will tell you the price will go up and down, it's just simply a liar, because no one knows the future. Yes, you can apply a lot of indicators. Yes, you can use a lot of indicators, but at the end of the day, you don't know the future and no one knows, right? It's still future. Many things can happen and all your analysis can actually go nuts if, for example, Donald Trump comes out and says something regarding dollar or regarding any other country. So then all your technical indicators, right, they go nuts. So that's why technical analysis is a good way for you to understand technically where the trend is going. If you're going there, let's say to trade for short term, let's say medium term, okay, but even if you go, let's say to trade for the long term, but again, long term is something different to discuss. We will talk about it because that's more of the short-term investment rather than trading. So moving forward, technical indicators. So if you look at the name of indicators, look how many of them here, right? RSI, stochastic RSI, MACD, Williams, at their highs and lows, okay? And it's just 13, right? So how many of them here, right? And this is just a very small list of them, let's put it that way. There's a lot more indicators that exist for trading, but they use the most, let's say, advanced ones, the most popular ones. Also, they're using moving averages, okay, they're using pivot points, and what their system does, by the way, they have all these indicators applied automatically, and these indicators now are measuring the, let's say, the price movements on different assets, and according to the location, let's say, of the price in that indicator, they give you, let's say, a direction. So they give you a recommendation. Either the indicator is in a buy zone or in a sell zone. So that way you know, okay, what direction that indicator is actually signaling. Now, in order for you to understand how to use these indicators, like I said, you either need to spend a lot of time by learning them, and still, there's not going to be any guarantee that you learn them well, because one indicator, let's say, for two different people will work different ways. For example, one strategy that's actually I'm using, for example, short-term strategy using Bollinger Bands, okay, is not going to help you with your strategy where you do, let's say, medium-term, okay, using the same indicators, because we have different, let's say, entry points and exit points. So, like I said, it all depends on your strategy. But today, I'm going to explain to you how to start using these indicators, so without, let's say, learning them, so you can get an idea, right, on what direction the market is going. Like I said, free of charge, but still you already have some knowledge before you go to open your trade. You already have a direction. So when we go to, like I said, investing.com, and we come here to the technical summary, right, we see here Euro, US dollar, British pound, let's say USD, we're looking Forex. We're observing Forex market, foreign exchange. I told you last time that foreign exchange is the cheapest asset, the cheapest market, let's say, to trade. So at this point of time, we do that way because we have only $500 on the accounts. It's just a very beginner account, remember? So by a beginner, you start with something small and then you test the waters. So that's what we're doing so far. We're testing waters on something, let's say, cheap, right? Like currencies. Now, if you also look at the timing, you see 5 minutes, 15 minutes, hourly and daily. Remember, the last time when we discussed the graph, I was explaining to you that the graph consists of green and red candles that represent different time frames. So for example, now my time frame set for 30 minutes. It means that every candle now represents 30 minutes price movement, okay? And the graph is used for you to do your analysis, to analyze what direction the price is moving, what is the trend in the market, if it's an upward trend or a downward trend. So that's why we using different time frames. If we, let's say, do short-term trading, then we're using time frames, let's say 5 minutes, 15 minutes, 30 minutes. If we do medium-term trade, we do 1 hour time frame, let's say 4 hours time frame to identify a trend, right? And of course, if we do long-term trading, we're looking at 1 day, let's say, right, 1 week, 1 month, and so on. Now, usually, majority of people, they do between short-term and medium-term trading. So that's why when you look at the time frames and you look at indicators on 5 minutes, 15 minutes, hourly, and daily, that seems to be quite a broad one. Imagine between 5 minutes and day, that's a very huge distance that the market can go. So that's not a very good and not precise, let's say, analysis that you can get. So what we're gonna do here, we're gonna do a little customization. Now we're gonna do this way. So we're gonna make our trading something between short-term and medium-term trading, right? And therefore we're gonna use 5 minutes, 15 minutes, and then we're gonna change it to half an hour, and then hourly, right? So that way we're gonna cover the time frames on the graph of 5 minutes. So the signals will be giving us based on 5 minutes indicators, based on 15 minutes indicators, 30 minutes indicators, bar chart, and hourly. So by clicking apply, now I have all these time frames at the top: 5 minutes, 15 minutes, 30 minutes, and hourly. And now all these indicators that I explained to you just now, they measure the performance of different currency pairs based on that time frames. Okay, and they're signaling us if that time frame is in a buying zone or in a selling zone. Now, to use this trading, I want you to call it, for example, a 4 aces strategy, so that you can remember it. Okay, now imagine you have 4 time frames, and as you can see, on some of them you can see a strong sell, strong sell, strong sell, sell. Okay, on some of them you can see sell, neutral, strong buy, strong buy. Okay, on some of them you can see strong sell, neutral, neutral. So that means that the signals are mixed. So when you see that it's actually not 4 of them in a strong sell or a strong buy, it means that the signals are mixed. So when the signals are mixed, you leave them. And you need to select only the ones that have only either the strong sell, as you can see here, on all 4 time frames. You see strong sell, strong sell, strong sell, or right, strong buy, but we don't have a strong buy, strong buy. You see, we have strong buy, and then buy, okay, but we don't have strong buy yet, but we have strong sell. So we have 4 time frames, okay, strong sell on Euro GBP, strong sell, strong sell, strong sell. That's what we're gonna do now. We're gonna go to our trading platform, taking Euro British Pound. So we're gonna go to trading platform, and we're gonna go and find Euro versus British Pound. Now, we are looking at the graph now of 1 hour. Let's change it to 1 hour graph. That's what we're gonna do. So remember, every candle now represents 1 hour movement, since our graph is on 1 hour. And we can see that here, right? You can see that here. Let me just, 1, 2, 3, 4. So 4 candles that the price was going down, right? The euro was going down versus British pound. It means that for the last 4 hours, the euro is declining versus British pound. Now, as I said to you before, to identify a trend in the market, you need to see at least 3 consecutive candlesticks in a row of the same color. Now we see even 4. Now, based on the trend that we can identify clearly that the market is going down, okay, for the last 4 hours, it's 4 hourly, or let's say downward trend, we also have a double confirmation based on the technical analysis, based on all these technical indicators that the investing.com is actually observing. So that is actually a second confirmation for us. So what we're gonna do now, we're gonna go again as we did it last time, and we're gonna click on advanced order. Now remember, to open your trades, okay, you always have to select the amounts of the money that you're gonna dedicate to that specific trade. So last session we said that out of $500 that I have on these accounts, okay, and with the risk level of 5 between 1 and 10, the risk level was 5. That's what we discussed. And using that 5 risk level, we said that in order for you to trade with that level, you need to leave aside on your free funds, on your free margin, about $300. And we said that we're gonna be using about $200 to trade. So now we have $200 to start trading again, okay? And remember, we also said that we're gonna use 5% of our trading capital. So 5% of $200 is, we said before, it's $10. So we're gonna go today and we're gonna go open another trade that will be used just 5% of our capital, $10, and we're gonna set it up the following way. So we go here and we select our trade size. Remember, when you go to open your trade, the first thing that you need to decide is how much you want to invest, meaning what trade size you want to take. So 0.01 is always the minimum trade size you can take on your trading platform, right? 0.01 lot, in other words, that's what it's called. So by using 0.01, as you may see, it requires you to use $5.93 from your account to trade. So the minimum trade size that is available for you to trade now, it requires from you $6 out of your, let's say $500 that you have on your account, right? So if you was going to change that, let's say, and create a bigger trade size, right? You can click on plus, and that way you can see your required margin, right, is increasing. That way you select how much you want to dedicate for that specific trade. So you don't put blindly, right, just a random amount, specific amount based on your trading plan and based on your risk management. So as we said, according to our risk management, we're gonna stick to, again, $11, which will be, again, 5% of our traded capital. And we're gonna go to sell. So we have to select a selling direction. And now, in order for you to preset the amount of your profit, remember we said, right? Once you invest some money as an investor, you want to know how much you're gonna receive back in return, so-called return on investment. So we said that in order for you to receive a return on investment, you can preset that amount. So if you're putting, let's say, $10 into your trade, you can put yourself a specific amount in return in your mind in percentage. So for example, if you put $10, how much you will be happy to receive percentage-wise? Let's say 1%, 2%, 5%, 10%, 20%, and so on. Same if you put, let's say, $1,000 into a trade. How much percentage-wise would you like to receive back? 10%, 20%, 30%, and so on. So the amount of your investment, right, it of course depends just on your capabilities. But the return on your investment, it now depends only on your, let's say, risk level, on your risk appetite, and of course on your profit hunger, right? And that's what it depends on now. But like I said, we start very, very small amount, like $500, very beginning, let's say, trade. That's exactly was the reason for starting this small amount, like majority of people do when they start small capital. Okay, not a lot of people that start straight away with thousands of dollars, right? They start small to 50, 500, right? To get started, to see how everything goes. By the time you learn how to make money, let's say, with $500, nothing will stop you to make the same, let's say, amount of returns at 10% on 5,000 or 10% on 50,000. So now you're gonna make 10% on $500, right? And then, like I say, you can scale it up to 5,000 and so on. So that's why we're gonna go here and discuss it moving forward. So moving forward, what we're gonna do now, we're gonna go and we're gonna put here the amount of our return. Like I said, we're investing now $11, let's say 12, okay? So the $12 is the size of investment. The 10% of $12 will be $1.2, right? $1.2, that will represent a 10% return to your investment. Okay, now, also, we discussed the spreads and commissions. That's the fees that you pay to your broker. That's something that you have to cover as well, because you pay that, you take that out of your pocket, okay? And you pay that trade, by the way, by opening the trade. So what we need to do now is just to cut that fees by, cut that fees that you're gonna pay by putting them into your profit. So the market will cut it, right? So the market will cover it. If you need to make now, let's say 10%, which is gonna be, let's say $1.2, and you have in your fees another, let's say 60 cents. So let's put here again, let's say $2 return, right? $2 we're gonna put in return. That will be 10% return to our investment. Plus that will represent also the fees that will be paid to a broker. So by clicking on the $2, that's gonna be $2 USD, I know how much I'm gonna get back in return. I'm gonna click on a sell. Okay, I'm gonna click on a sell, I'm gonna confirm that. Now, my trade now gone live. You see, I started my trade with minus 50 cents at a loss. As I explained to you last time, that's how you start every single trade when you when you basically pay to a broker that fee, okay, spreads and commissions, okay? So you have to cover that first, right, by a market moving to that direction, and it will cover first your fee, and only then you're gonna start making your profit. So that's gonna be the second trade that now you have open. the first trade that we have open, and we're gonna go for the second trade. So the first trade is open. We're gonna go now to technical summary again, and let's see what we have now. So Euro GBP, it's something that we traded just now. And then we can see something else, let's say Euro CHF. Euro CHF also on a strong sell recommendation. So let's go and observe Euro CHF now. Okay, Euro CHF, here we go, Euro CHF. Now, we gonna check also 1 hourly graph, right? And then on the 1 hourly graph, 1, 2, 3, 4, 5 candles in a row going down. So that's 5 hours of the euro going down versus Swiss franc. Also, very good opportunity to possibly sell it. So what we're gonna do now, we're gonna go and click on advanced order. And we're gonna do the same thing like we did the last time. So we're gonna just put the amounts, you see, again, 1186, that's the size of investment. And we're gonna put sell price, change it to value, so we know exactly the amount we're gonna take back in return. So as we said before, we're gonna put 10% return plus cover the fee. So again, about $2, okay? And that way we're gonna click on a sell, right? So the second trade now gone live. And that's gone sell, right? So we are selling it, two of them, Euro CHF and Euro British Pound, right? Now let's see if there's anything changed here, okay? Let's observe, right? So far nothing changed. We don't have any other signals for us to look at to trade on a strong sell or strong buy recommendation. So at this point of time, we don't use investing.com for Forex, but what we can do, we can observe, let's say, indices, right? So we go to indices and specifically, not indices, but futures. Okay, so future index, future index, and we're gonna look at customization again. We're gonna put hourly and then 30 minutes and then hourly here, and then just apply here. Now, look, remember we discussed last time indices, and I told you that index is the basket of the number of biggest companies inside specific country. So now we're gonna observe if there's any opportunity with some indices, right? And look what it says here, right? It says CAC 40, that's a French index, right? Let's observe that. We're gonna go to indices now, right? So let me look at the indices with you, and we're gonna go to France 40. Okay, on the France 40, we're gonna put an hourly chart and look at it. Okay, so this index is going down. Now, let's see how much it requires to open for you one trade. You see, 0.01. 0.01 trade size requires from you already $19.29. And now this 0.01, it actually represents one share of the index. Okay, so you're selling, you're about to go and sell basically one share of that index. Now, to go and sell that share of that index using $19.29, let's say $20, let's say you want to make also your 10% return. So we'll click on sell, we're going to place some value, and we're going to make 10%. So you see, to $20, 10% of that will be $2 plus your fees here. So let's put here, let's say $2.5, right? $2.5, that's how much you're expecting to make once that trade, okay, goes that way. Now, we're going to go and we're also going to confirm that. So now you have free trades that are running. All these free trades now are running, they're open here, and they are set to close automatically. And obviously you don't need to do anything now, okay, because all of them have their take profits and they know where to stop, you see. Once these trades gonna hit that take profit price, they're gonna close automatically. Now, by closing automatically, what's gonna happen is that the money that you're using now, the margin, you see now you're using $43 in order for you to open that free trades. $43 invested, and now your trade's running at the total minus $2 loss because they're still open. So they're still open, and this loss is so-called unrealized loss. Remember, for the loss to become realized, or for the profit to become realized or unrealized, it has to be closed, right? So for something to become realized, it has to be closed. So now all these trades are running, and all we need to do is just to give them some time to, obviously, to close once they reach that levels. So that is the very easy way for you to identify what direction to trade by using some technical analysis and specifically investing.com tool. Okay, so I just wanted to give you that session. Like I said, you open free trades. Imagine if you're opening free trades every day and you set up yourself to put 10% on that free trades every day, and that 10% could be anything. It could be $1, it could be $10, it could be $100, it could be $1,000, right? So that free trades could be for you $3, it could be $30, $300, $3,000. So like I said, you don't need to trade a lot. In trading, in fact, you basically, by opening every single trade, you taking a risk, because the more trades you've opened, the more chances that something's gonna go wrong. Okay, keep it in mind. So in fact, you need to limit the number of your trades and to, let's say, to convert that into the quality, right? So instead of you trading a lot small trades to make, let's say, small returns, you basically go there with a bigger trade size, putting yourself just a 10% return, let's say the very first one to receive, the fastest way to receive, let's say 10%, then 20, 30, and 50. So by putting yourself that amount of, let's say 10%, 20%, you are limiting the risk, because as long as your trade is open, that's only where your risk is actually, you're taking a risk, but that's where your risk starts when you're opening your trade. By the time your trade is closed, that's where your risk stops completely to zero. So that's why you need to get into a trade to make some money and get out of the trade, okay, without, let's say, taking too much risk. So that's something that I wanted to show you. And like I said, now these trades are gonna be open until they close themselves, right? Like the previous ones. You see this trade is already turning into some profit, the France 40. Okay, so it's turning down. The other two are still fluctuating, so we're gonna leave them for a little bit longer. Okay, and we're gonna come and check them on our next session. So next session I'm gonna give you on fundamental analysis. So I will explain to you how to use news and how to read, let's say, economic reports that are coming every single day, okay, that impact trading, that makes the price to go up and down, skyrocket, right, without you really even realizing why it happens. But I will explain to you during our next session. So it's going to be on fundamental analysis to cover the second part of trading, as we covered technical today. So by observing, let's say, your technical and fundamental analysis, you're gonna have a comprehensive, let's say, a very full picture of trading in general. So subscribe to my channel now, follow me so you don't miss that, okay? You don't miss that session on fundamental and how to take that in your advantage. Also, I would like you to subscribe to my Telegram channel. On my Telegram channel, I'm posting every single day. Every single day I'm posting fundamental news, the most essential ones, the ones that actually impact the market's movement, the news that give you an opportunity to buy or sell some assets and to possibly make money. I also posting some technical analysis, right? So some technical signals that you can also use for your trading, so you know when to buy and when to sell. So you use that in your advantage. Subscribe to my Telegram channel, okay, and get access to that news every single day. So you don't need to go to a lot of places. I'm going to all these places and I'm gathering the whole information that is the most reliable and is the most accurate, let's say, and the most valuable for you for trading. And I explain that in a very simple language, like I said before. So follow me on my Telegram, please. I'm going to be waiting for you there. And of course, I would like you to put down in the comments if there is any questions that are left today, or you may have some questions about the session today. Okay, let me know. I will be more than happy to respond to them. I respond myself, and I'm gonna be very happy to see your comments over there, or maybe some ideas, or maybe you have some sort of questions you may want to raise, okay, or something you would like to cover. Let me know. Okay, I also provide one-on-one live, let's say, free of charge, completely free of charge, educational sessions, okay, because I'm running my academy, right? You can see my academy in the angle, right? Beat Your Broker One-to-One Trading Academy. So there I'm helping my clients to get started. I'm giving them mentorship, right, one-on-one, and of course you can take advantage of that as well. Like I said, the very first session is absolutely free of charge. You're gonna meet me face to face. We're gonna talk about your goals. We're gonna discuss your capabilities. We're gonna talk about your risk level. We're gonna define your plans and goals, let's say, for your money to make. We will see your timing, how much let's say, time you have for trading, your patience level, and so on. And then we're gonna build a specific plan, unique plan that will obviously work only for you, okay, based on all the things that we just covered. So let me know if you want to take trading seriously, if this is something that you really want to turn into your possibly secondary and maybe even primary source of income. So that session will help you a lot to understand if trading is really for you or not, because I'm going to give you, let's say, a very deep, dive into trading to explain to you what you will need to be prepared to once you go to trade. And once you understand, let's say, the things about, things that you don't know now about trading, then you will take your informative decision if you would like to take advantage of trading, take advantage of that trillions and trillions of dollars capital that you have access to now, where you can take any money now and the market will not even notice that, right? So I hope that today's session was also helpful, right? In order for you to get an idea on where to get some other signals, let's say technical signals. Right, let's catch up on our next session. So like I said, subscribe, and I'll see you on my next session with fundamental analysis. Yeah, see you soon. Enjoy your day. Bye-bye for now.